Hello, traders. Gary Wagner here, approximately 1:30 in Honolulu, 7:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 16th day of July, 2021, and this is the Daily Report for Gold and Silver. On today's report, I want to focus on two primary things: my short-term forecast and long-term forecast for gold. Because while we did see a decline today, I am extremely optimistic long-term. We'll speak about that during our charts and our show, which begins now. While gold did close higher on the week, at least for today, it had a medium to strong sell-off, giving up $16.50, 0.9% in terms of the percentage drawdown, currently fixed at $1,812.50. On today's show, I want to really focus upon two things. The first is my short-term forecast and take into account today's sell-off, and then the big picture as well. We'll do that when we pull up our charts. First, to my short-term forecast. To do that, we're using a daily candlestick chart. However, the Fibonacci data set that we're using is extremely small. It only accounts for this rally, which began on the 29th of last month, when gold was trading at around $1,750, up to this top at about $1,835. That's been the bulk of the rally. We hit the highest trading point, of course, yesterday. We can see that it ran into resistance really just below the 50-day moving average. And today we had a significant sell-off, selling off, as I said, to the tune of about $16.50. With that in mind, my sense is that it could be a one and done, but it is more likely that we could enter a corrective stage. If that is the case, what I would be looking at is basically this being a wave one, and we've now entered a wave two. I would look for it to go as low as either 38.2%, that's the Fibonacci retracement. That sits at 1802. However, if it is a deeper retracement, it could trade as low as maybe a 50% retracement. And the reason I'm looking at that is because I see major support at the 100-day moving average, and that is currently at $1,790.80. We did enter a trade yesterday. We went long August gold at 1822 and change. So we're off about $10 on the trade. I'm looking at this as a much longer trade. I am anticipating rolling this over into the next most active contract month, that will be October, in about 2 weeks. I didn't expect this to be the top, but I'm not thoroughly surprised. What I found most interesting in the financial price changes today was that reversal in which we had the equity traders focusing on inflation, and for the most part, gold traders, which had been focusing intently on it throughout the week and over the last couple of weeks, largely ignoring that. But in any case, whether it goes to $1,800 or it goes to $1,792, the reason we put our stop below the 100-day moving average was for that protection. We are long, as I said, from 1822. We do have a stop that is below the 100-day moving average. So in terms of a short-term forecast, we could see a correction. This could be a beginning of sideways action, but it's more likely that we will either see on Monday a recovery and higher pricing, or a move closer to the 38.2% fib retracement level. But traders, it is the big picture that I am definitely most excited about, because I believe, based on our technical studies, that we could be at really the beginning of a major rally. This rally will be a long-term rally. It could take 6 months, a year, maybe even 2 years, but I am looking for a substantial increase overall in the price of gold. Now, this is based upon Elliott wave theory. And as you can see, we have a very long-term weekly candlestick chart, which we have put up on the screen. And we also have our get Elliott wave count as well as my personal analysis to determine different price points for parts of this next rally. We begin at about 1166, and that is the conclusion of this major second wave, which begins this tremendously long third wave, taking us from 1166 to the record high at 2084. What followed was a pretty steep correction, which began immediately following the all-time record high in August of last year, and it took gold down to approximately 1680. Most importantly, not only did it signal that this correction had ended, but that we have now entered a major fifth wave. Now, a major fifth wave itself is going to be a move upwards that will exceed the highs achieved in the third wave, and it will be then subdivided into 5 waves. That is called the impulse phase, and those 5 waves will be composed of 3 primary moves to the upside or in the direction of the trend. Those are called impulse waves. Those will be waves 1, 3, and 5. And waves 2 and 4 will be our corrective waves. Once that is completed, you would then go into either an ABC correction or some variation of a correction type. Which brings us to this current chart as well as our projections. What I believe is that we have probably seen the completion of a wave 1. Now, this is simply one of 5 waves that will compose the fifth wave, and that we have gone to and completed a wave 2, which means that we are most likely in a wave 3, which will be the longest of the wave. But even this wave 3 can then be subdivided into a 5 count. You can always subdivide it because of the fractal nature of Elliott wave. That being said, we have done some simple calculations to ascertain where wave 3 could go. And the standard practice is that you measure the distance of price movement of wave 1, and then beginning at the conclusion of the corrective wave 2, you do a 1.618 extension to achieve what is believed to be where wave 3 will terminate. That is exactly what is in red here. So we could see wave 3 conclude as high as 2128. Remember, we're looking at long-term studies that will last multi-years, definitely not multi-months. Now, that is where I am anticipating the conclusion of our third wave. At that point, we would enter some sort of a corrective phase. And now we want to analyze where we think the fifth wave will terminate. And the accepted methodology for that is to measure the complete distance of the longest impulse wave, wave 3, and then beginning from the conclusion of wave 4, do a 0.618% extension, and that is what is done in black, and that represents this conclusion here of 2248 to conclude this rally that really began years ago. So long term, I am extremely optimistic on where I believe we could see pricing go, especially with the fundamental events and the undertones, the upticks in inflation, the pandemic that led to a recession. All of these factors collectively, I believe, could have a profound impact over time on gold. Day to day, we can see anything. There's always going to be noise in the market. There's always going to be profit taking. But as a whole, if Elliott wave, and I believe there to be a lot of merit to it, but if it holds weight, we will see gold trade not only back above 2,000 in the record high, but possibly go as high as 2,200 or higher. And that is my long-term forecast. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.